Guys, welcome back to another episode of Raw Stocks. This is Rustic. Today we're going to be taking a look at Tesla's chart. We're going to look at where price came from, where price ended today, and where price is likely to head tomorrow and into the rest of the week. Before we get started, don't forget to check out the links in the description below. Links to the Raw Stocks Trading Discord, free to join. Premium members get the callouts. Also a link to Top Step, which is a futures funded trading prop firm. If you're interested in becoming a futures funded trader, you can take the combine by clicking on the link below. Only $59 for a 50K account. Now let's go ahead and dive into the Tesla chart. We had a pretty decent down close day. I wouldn't say it was amazing. It wasn't a huge down close day. If you were looking for that correction, right? As we pushed up to that order block above, we saw it hit to perfection right at the lower boundary of that. And oftentimes what you'll see is that first attempt, you'll hit the lower boundary of the order block, you'll reject off of it, you'll come back down to some kind of support level, and then the next time you'll push up through that order block, eventually taking it and heading higher into the additional order block above. But what we saw so far is we saw the price run up right to that order block, right exactly to the tick of that order block. And then we saw a correction, which is today. Generally, the market entirely melted down, not just Tesla, but you also see we had a gap down from where we closed yesterday and where we opened today. Tried to make a push up right about to that mean threshold of yesterday's block of its candle, not including the wicks. Just right there, looks right about the 50% level of that daily block yesterday. And then we started to trade down. Now, we talked about in the Discord, we have this breaker block here, right? And the breaker block is where we broke above the previous high. We gapped it. And so that breaker block is going to be our first level of support. Now, anticipating that we could trade all the way down to the lower boundary of the breaker block, which is 177.79, right? If we're just looking at the daily time frame. Now, if we give that breaker block up, that breaker block is still a level of resistance or support if we're above or below it. And what we'd be looking for price to come down and do is come down to that gap fill at 172.55, and then we have a previous breaker block that was on from the move down that we broke back through and reclaimed, so that at that point we can call it a mitigation block, and we're looking for it to support price. And so if we come down through this breaker block, we could potentially dive into the mitigation block, which could bring us as low as 160.48. Now, if we gave up that, then that same block might offer resistance if we were to pop back up, but I don't think we're going to get down that far. And I'll show you what I mean if we use the path tool, right? Let's say we continue to melt down a little bit tomorrow, right? Maybe we wick all the way down to fill that gap and we remain open in this breaker block. What I'd be looking for then is for price to make that run up to 205. And if we put on our moving averages, we can see that right around that same level, we got our 50 period, and then we got our 20 period that's starting to curl up. So what I really want us to see is, I want us to see if we're bullish, is not to give up this breaker block. We can wick below it. We can wick all the way down, to the 20 period or into this mitigation block. But I want to see daily candle closes above that 177.79 range. Okay, if you get an opportunity to go long around 175, if we do hit it with a wick and then rally back up, I would take it. I'm looking for long in between 170 and 175, but I want to see daily candle closes above that 177, 178 area, right? And keep this breaker block open and then see us do another push up. You can see with our RSI, if we come down a little bit more, we got our moving average line on the RSI curling up as well. And we could see that drop down to test that moving average and then continue to pop back up as we target the higher highs. We're above both the 50 and 20 period, so that's bullish. Right now, we're just seeing a correction after that nice big strong move off of earnings and then off the news over the weekend of the China full self drive. And so, definitely just a little bit of a correction, right? Totally normal to pull back to the 50 and 20 period on the daily chart. Now, if we were to give that up, again, I'm going to show you, we'll just start a new path tool. I'm going to show you what that might look like. Maybe we come down right? And we close below this breaker block, and then we pop back up, and then we attack. Maybe the 20 period is still down here. We attack this mitigation block, right? At that point, we can still look for a move to the upside. That brings us down into that, like, again, 160 all the way up to 171. So there's a $10 range within that mitigation block, where we could find support as well before we again make that move up to take out that 205 level. Now, if we give that up entirely, we're looking to probably fill the gap all the way down to 147, maybe run a test on this previous order block, right? We could also be looking at our fib levels, because now we have a clear swing high, swing low, and we could look for price to come down into that optimal trade entry level, which is inside of our gap, right? Or run a test on the order block and see if it wants to hold. At that point, if we got all the way down there, you could also look to take a long entry and target the previous highs. Okay, it wouldn't look great if we drop below these moving averages. Could mean we're going lower, but it's a really low risk entry if you take something inside of a previous order block, because it's basically your support levels. So say you take that trade, right? You could just put your stop just a little bit below, target the previous high. Got a 6-to-1 risk reward ratio. You could run it even a little bit deeper to make sure your stop doesn't get hit if we're stop hunting, right? Still like a 4-to-1, 3-to-1, whatever. Anything better than a 2-to-1 is not a bad risk reward ratio. Let's go ahead and jump into the 1 hour chart. On the 1 hour chart, we got our blocks here right down on that mean threshold of that breaker block. This is really what we want to see hold. We want to see this mean threshold hold. We definitely want to see this breaker block hold entirely if we're looking for price to continue to make that move higher right away. If not, we're going to drop below. You can see we came right down to the 50 period, right? Wouldn't be surprised when we see pre-market open that the 20 period comes down just a little bit lower. And what I'd be looking for is for that 20 period to just barely touch that 50 period, keep that 50 period moving up, have the 20 period roll back up, and then see a run at 205. Okay, I don't think we're at a level that's a bad entry point. If you were to take a long inside this breaker block, what I want you to do is be conservative, and I want you to set your stop loss right just below that breaker block low, and look for it to be a 1 hour candle close, or 15-minute candle close, or 5-minute candle close, something like that, depending on how long you have left on your options contracts. If you're trading shares, you can let it go a little bit deeper. If you're trading options, if you're on the 1 hour time frame, you probably should not be trading this week's options. If you're closing it on a 5 or 15-minute candle close below, that would be fine on weekly, just to protect yourself. But if we were to take it, say right where we're at in the mean threshold, and target the previous high, set our stop just right below that, lower boundary of that breaker block, 4.75 risk reward ratio, not a bad entry if you're going to play that breaker block. Now, again, if we give up that breaker block, we come down to the mitigation block. You can do the same thing. You could look for a long entry, right? Inside the mitigation block, you can use the block itself as your stop loss, target a 2-to-1, right? Or target the previous high if you want to run something that's multiple weeks out, right? Anywhere from a 2-to-1, right, back into the breaker block. We got a 2.7, all the way up to a 6-to-1 if you're targeting the previous high. Just make sure you're buying yourself enough time, depending on what time frame you're trading, what contracts you're trading, because that's going to make or break it. If you're looking at higher time frame charts, you need to be trading longer dated contracts. Last, we'll look at the 15-minute chart. Just gives us a look. Actually, let's just jump into the 5-minute chart, take a little bit better look at today's price action, our silver bullet, our time macros. So oftentimes, we've talked about this in the past, right? When price doesn't get back above, right out of the gate, right out of the open, if price does not get back above the half of the London open range, right? And this is our London open range. We've seen this time and time again, talked about it a lot, right? When price gets right back up to it, right? First off, when it's fading it into the, New York AM open session, right? Which is also pre-market hours. But when it's fading that London low prior to the market open, and when we pop back up, because we often see that pop or drop right out of the gate, right? And we pop back up and we fail to take that 50% level, right? A lot of times we trade right back up to it, and then we end up dumping for the day. We've talked about it many times. We've given other examples of it, and here it is happening exactly the same way again, right? So when it pops back up, it fails to take it. We look for some kind of entry point, right? what I see. I don't see anything on the 5-minute time frame. If you drop down to the 1 minute, maybe there's a fair value gap in here that you'd be looking to take. But you'd be looking for an entry point somewhere to look for your short, and then write it down from there. Okay, we also get a fair value gap down below, but it doesn't look like we pop back up to take an entry to ride that one down. So that would have been late. If we want to look at the 1 minute chart again on Tesla, just to take a better look and see if there was some kind of indication of an entry, you see on the 1 minute chart, we deliver into that order block, right? And then I'd say we got another order block. Let's check the fib levels on this. I bet it's pretty close to optimal trade entry, and voila, hit it with a wick. Optimal trade entry from swing high to swing low. All right, we popped it back up. There's your Smart Money Concepts entry. If you use your short tool and you look to enter somewhere in that range, your stop is at the previous high, right? And you can see we delivered into that order block and then failed to rally back higher. So that's your 1 minute indicator, using again those pre-market ranges, that we failed there, came down, popped up, optimal trade entry, target a previous low. There you go, 4-to-1 risk reward ratio, right? We hit it during the silver bullet time macro. If you let it ride a little bit further, you got a little bit more out of it. We ended up hitting symmetrical swing. We ended up hitting 2 standard deviations. So the tools work, if you know how to work them. I did not take a Tesla short here. Did swing a Tesla short into the end of the day. And if we continue to fade like we have been, or open low, that Tesla short is going to be nice. But just so you guys see, Smart Money Concepts here, optimal trade entry ended up paying out nicely if you caught it. That's all I got for today. Hopefully this has been informative for you guys. We'll be looking again for Tesla to come down to the 170, 175 range before we're looking to go long, to target that 205. Don't forget to like, subscribe, share with all your friends. Drop a comment in the comments below if these videos are beneficial for you, or if there's something you'd like me to cover in future videos. Just go ahead and let me know. We'll see you guys on the next one, and good luck trading tomorrow.